the agreement is temporary in its nature, of course, because the deep cuts of 9.7 million barrels per day that were agreed by OPEC Plus are limited to the months of May and June of this year, when we're going to see the depth of the destruction of demand by the pandemic. So if we actually take it forward and put it in the context of how production is going to start going up, and we also take into account that Saudi Arabia yesterday published the official selling prices for term buyers across Asia, deepening the discount sharply by more than $4 per barrel, we realize that we're not really out of the price war. And actually, the Saudis have doubled down in ensuring that their crude remains the most competitive across Asia, and forcing other peers in the region and Russia to fire sale their crude in a region where there's no demand for it.
Alejandro, Goldman Sachs says this deal is historic, but it's insufficient. The firm says prices are likely to fall over the next few weeks. What impact do you expect this to have on pricing in the medium to long term?
If you compare the actual amount of crude that is being taken out of the market now in the second quarter relative to the first quarter, you see that it's only about 7 million barrels per day, as Goldman says. Effectively, that's only a third of the total demand destruction that Argus is expecting for this second quarter, an average of 18.5 million barrels per day drop relative to the first quarter. So it's only a fraction. Certainly, there will be pressure on prices, and WTI specifically, the price of WTI that producers get in the Midland region, which Argus yesterday published at $19 per barrel, will be under increasing pressure to come back down to the levels that we saw last month of about $10 per barrel, to actually force the shale producers to shut down their output. And yes, President Trump is right in saying that the cuts will expand, but that will not be as a result of the OPEC Plus agreement. That will be as a result of shale producers in the US and elsewhere in the world who will be forced to cut output because of those low prices.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.